A very good evening to all the participants. Thank you for joining. This is Aksha Menon representing PMS Bazaar. Today, we are happy to announce a new webinar series, The Alternate Universe, partnering with Sundaram Alternates. This is our first episode. We focus on discussing global solutions for evolved investors. We are privileged to introduce our guest on the show, who is a thought leader with over 20 years of experience, Mr. Satheesh Krishnamurthy. Hello, Mr. Satheesh. Welcome to the show. Joining him, we have two prominent industry experts as moderators of the day, Mr. Vikaas M Sachdeva and Mr. Madanagopal Ramu. So before jumping out of the webinar, so let me give a brief about Mr. Satheesh Krishnamurthy. Mr. Satheesh Krishnamurthy heads private premium banking, NRI business, and third-party products for Axis Bank. He joined Axis Bank in March 2014. Under his leadership, the bank launched their most premium brand, Burgundy, a wealth management offering affluent clients in 2014. Burgundy Private, thus bespoke of offering for private banking clients in December 2019. The collective assets under management have crossed USD 34 billion, both among the fastest growing units within the bank and the industry. Prior joining Axis Bank, Satheesh worked with Citibank across multiple geographies for over 13 years. He was instrumental in launching Citigold Private Client, an exclusive offering for high net worth clients with over USD 1 million relationship size with the bank. And Satheesh was also featured in Fortune India as India's 40 under 40 in 2016, in Business Today as India's hottest executive in corporate sector in 2015. He's a director on the board of FIAI, India's financial distributors body, working towards strengthening the cost, development, education, progress, and wealth management industry. Satheesh graduated from IIT Kharagpur and holds an MBA degree from FMS Delhi. So let's move on to the moderator of the day. So Mr. Vikaas M Sachdeva is an industry stalwart with over 3 decades of experience in the asset management business. He is currently Managing Director of Sundaram Alternate Assets Ltd. Starting his career with asset management as one of the founding members of Birla Sun Life International AMC Ltd. Vikaas has been with global organizations like ING and AXA in India. He has been the CEO of Edelweiss Asset Management, global CEO of Inam Asset Management. Prior to joining Sundaram, he also served on the board of AMFI and was also Mutual Fund Advisor Committee of SEBI. So moving on to Madanagopal Ramu. Madanagopal Ramu is the head equities fund manager with over 15 years of experience in Indian financial markets. He currently manages an assets under management of around 3,400 crores across PMS and AAF platforms, some of which have recently won awards at PMS Bazaar, Bazaar's PMS ranking for the financial year 21-22 event. He comes with strong academic qualifications as he qualified chartered accountant and a management degree from BIM Trichy. Thank you. So over to you, Mr. Vikaas.
Thank you so much, Akshara. Satheesh, a warm welcome to you on the show. Thank you. We're going live here from Pondicherry, a place where me and Madan have just come for an offsite, and I believe Satheesh, you are in Calcutta. So the power of Zoom connecting everybody across the globe, getting onto a show. It's my privilege to actually introduce Satheesh, the person behind the professional, as I always tend to do. Satheesh, I've been speaking to a lot of your colleagues, not a lot, few of your colleagues, and your industry friends, and I've got some very interesting insights in terms of what makes you tick. I just made a note of them. I just want to share some of it with the audience. As a colleague, they're off you. They don't just respect you or love you, they're in awe of you. And some of the quirks they found, quirks quote unquote, is you're a stickler for time. You're a stickler for time, agenda, and decisions. Everything has to happen as per schedule. You don't suffer fools lightly, as the saying goes. But usually it's difficult to make out, you have a very calm demeanor about yourself. But people who know you, saying that quite like Dhoni, you're very calm in your demeanor, but your body language actually is a dead giveaway in terms of what you're feeling at that point of time. You read a book a week. That's amazing on an average. And not just that, just to quote, something very literary, you are quite perspicuous in quoting from memory. You can actually quote from a book which you've read 10 years ago. Not surprisingly, your favorite book, your favorite series is from PJ Wodehouse. You're an avid cricket fan, a really avid cricket fan, and you have been a chess player of serious repute. I think that explains the chessboard in the photo. I didn't know that. One very nice thing about you is that you, wherever you are in the world, you actually seek out Indian food. You don't want to settle for anything less than Indian food, particularly dal and rice. That's quite amazing. One of my personal favorites, which I thought, and I read this in a magazine, you're quite witty. People tell me you're quite witty, but I think the epitome of wittiness was during one of your interviews for a post at Citibank, I think. You were asked why one should hire you, and you gave a gem as an answer. Said, anyone who has hired me has gone on to becoming a CEO eventually. Why would anybody not hire you? By the way, that's true, isn't it?
It was.
Yeah. So thank you, Satish. Thank you for gracing the show. And let us just get down to this conversation. Satish, my first question to you is that, as Indians, we tend to think that India is the center of the universe for every investor group. However, does an evolved investor with a global perspective, you could call him a global investor, view India as an investment destination with the same amount of intensity as he would when we look at it from our country perspective?
Thanks, Vikaas, and firstly, a big thank you to all your, folks who have taken their precious time to listen to us this evening. I'm humbled by those words. I think all my colleagues and other friends you've spoken to have been very generous, I must confess. So let me try and give my perspective to this session. I think, firstly, it's a great initiative by Sundaram Alternates and Vikaas, by you in particular. It's great to have, Madanagopal. I've had occasions to meet Madan as well. So it's clearly a very high investment quotient conversation, very clearly. So thanks for that. Now, just this question around India and how, investors are perceiving India and how we as Indians obviously look at India as the center of the universe. I think if ever one had to think about India as the center of the universe, I think it is now. So I think it is a good spot to be in more ways than one. In fact, I was looking at some data as well. So if you look at how foreign investors are looking at India, very clearly, when they look at India, they see a very strong economy. We have broken the rest of the pack in the way our markets performed in 2022. It shows resilience in our economy very clearly. I think the stability in the government is an important factor. You look at the reforms that are being undertaken. I think it's at a fairly good clip. And the fact that I think India is getting even more diplomatic muscle. We are also having the presidency of the G20, as we all know. So very clearly, there is a lot of an overarching, let's call it, realization of India's both hard power and soft power coming into play. Now, how is that playing out into the world of investments? I think when I look at how India was bucketed amongst emerging markets in the past, India was a subset of emerging markets in most indexes. And China used to have a dedicated allocation. Now, when we look at the MSCI Emerging Markets Index, India has almost doubled its weight. So that's a clear, indication of India's growing muscle. You look at China, on the other hand, its weightage has been, in fact, it's fallen for the first time below 27%. So we are clearly fairly behind China. But notwithstanding that, given the way we are a democracy, we have our own pace of growth by getting everybody along. India is turning a corner. There is also, I think, a very clear shift in the way foreign portfolio investors are looking at China within their basket of emerging markets. So, I mean, everybody's talking about China plus one. So their focus as well is becoming, in a way, diversify out of China, right? And of course, other markets too, like Korea, Taiwan are benefiting from this change. The other factor, I think, which is working very clearly for India is the equity cult, which is, gaining ground. Again, when I looked at data, 4.8% of Indian household assets as of March 22 are in equities. And this was about 4.3. So a 50 basis point in a year is not a bad deal at all. And, if you were to look back, even as recent as 2020, that number was 2.7%. So very clearly, I mean, and we did see that all through the COVID phase, loads of demat accounts getting opened and more and more customers entering into this equity cult. So I think overall, I would state that India is very important. At the same time, when you look at the Ultra HNI and the HNI segment of customers, global investing is something that they look at. I mean, India is obviously their home ground, but they also want to get diversification from a currency standpoint, from a geography standpoint, and also gain alpha by investing in markets which may have got battered over the last year or so. So there are opportunities emerging. And I would also state that for Ultra HNIs, I find that this variable capital company or the VCC structure in Singapore, under which several collective investment schemes, either open or close-ended, may be pooled for an investment purpose at the same time. And that ensures the individual client assets are ring-fenced from each other. So these are things that I'm finding as gaining ground substantively.
Interesting. One of the points I picked up while you were talking was the G20 leadership. And I read someplace that India's success as Sone ki Chidiya in the good old days as economic superpower was primarily because it was preceded by thought leadership. India was the world's thought leader and thereby it became an economic superpower. So maybe you're right. It's our time to fly again. You also mentioned something about HNIs and Ultra HNIs. Typically, when we talk about an HNI or Ultra HNI, what comes to mind as a typical profile is somebody who's very senior, 60 plus, looking at some very conventional investment avenues. But with the changing economic and business landscape, has the demographic profile of a typical Ultra HNI or for that matter an HNI, has it changed? Has it evolved? What's your view?
I think it's a great question, Vikaas. I think we are clearly a generation which are living through multiple inflection points. And I think one such inflection point is very clearly how, the past pen picture of an Ultra HNI being a late 50s person who's really been a businessman and who's had to plow through, multiple decades to get there. That's changing quite radically. So the first clear trend that I see is tier 2 and tier 3 cities are now accounting for 50% of the recognized startups in India. So what's happening is there is wealth that is getting created from tier 2 and tier 3 cities, right? I think, let's say the state where I was born, you see the startup based out of Tenkasi and it's creating waves, right? And so that's one clear trend. And also what we are finding is whether for various reasons, you look at metropolitan cities, there is a degree of saturation from a cost standpoint, from a availability of infra standpoint. And in this work from anywhere model, entrepreneurs are also thinking beyond geographical boundaries. So that's the second thing that I find. The other, concurrent impact of this, and we were looking at for wealth to get created, geographically, how many multinational companies are setting up shop across locations. So we saw that, I was reading through a management consultancy report. I think this is, the source is Zinnov. It says that about 976 multinational companies have set up 1,257 global in-house centers in India. I think so what it's telling all of us is that India is emerging as a great hub for multinational companies globally, and out of which, by the way, interestingly, already 68 of these global in-house centers are actually in tier 3 kind of locations, right? And so this is something that we are seeing. The other piece is that it's also, the startup community is also attracting a lot of money. The share of financing to startups, again in tier 2, tier 3 is up some good 15% and thereabouts. Tier 2 city startups in India raised, I think, over $1 billion across some 300 odd deals. So this is the way I see that segment, gaining more and more ground. Also, when you look at the mutual fund industry's popularity, it's gaining ground beyond the top 30 geographical locations. And I'm sure, Vikaas, you will appreciate that, having spent a really long time in the MF industry. So I would say that clearly the profile of Ultra HNI are changing. I mean, there are entrepreneurs, we know about, some of the entrepreneurs are barely into their 20s. I mean, some are high teens from an age standpoint, and they are willing to take risks. They are willing to experiment. They have a much more open mind about many things. I mean, you're looking at trends like Chat GPT, and things are just changing quite rapidly. And we find that, large size millionaires, billionaires are coming from a spectrum of industries which didn't throw up as many super rich. And clearly tech is a transformer across sectors. So tech is a unifying theme for there to be scale. So that's the way I see this.
Hi, Satish. Really wonderful to catch up with you. And first, I'll start with congratulating you. Under your leadership, Burgundy has grown multifold to become an important and a large player in the wealth management space in India. So congrats for that. And as a head of Burgundy, you will be listening to a lot of people giving you a lot of thoughts about markets for 2023. First, I would like to understand what you think from whatever you're reading, where is market heading to in 2023? And also some inputs you can give, what best of the minds in India also talking about it. That would be great.
Yeah, great. Thanks, Madan. And, frankly, the entire credit of, the Burgundy business goes to, the very hardworking, our relationship managers, right? The power of the Axis brand. I think what we've really tried to do is leverage the power of Axis. And I've just been at the right place at the right time, so to speak, in terms of just facilitating this opportunity. And I gain extreme energy by being part of such an energetic bunch who keep pushing the frontier. Now, as far as your question around, where we are, and I think it's important to just spend a couple of minutes by also looking at what happened in 2022 before we look to 2023. I think by any yardstick, 2022 was a very tumultuous year for global capital markets. And if you look at geopolitical tension, I mean, you looked at what happened with the Ukraine-Russia continuing tension, right? Economic headwinds. The white elephant in the room, it continues to be there, is inflation. I think it's inflation measures are reaching 40-year highs, right? And the economic simulation that's come from loose fiscal and monetary policies globally, supply chain disruptions, consumer spending, moving more and more from goods to services, people wanting not to own some of these depreciating assets, are very clear trends that we are seeing. Also, with the kind of hiring that happened in 2022, and you're already hearing noises, especially from the tech sector, of job cuts, right? And we are seeing that. But just about a year ago, I think wage gains were massive. Obviously, it would hurt margins of companies. I mean, even closer home, if you look at the financial services sector, I mean, there is immense competition for talent. The wages are getting revised, but the question to ask is that going to be sustainable? So, so if I were to summarize from a central bank action, we saw that I think over 80 central banks tightened hard, right, from pretty much the second half of 2022. And I think that trajectory seems to be continuing, which is why markets continue to be nervous, especially from an Indian standpoint. I think the view is that the Indian equity market seems to be fairly well valued. So, the pundits always tell you that it's a stock pickers market in a way. So you've got to apply multiple yardsticks, financial yardsticks, understanding of business cycles. There are multiple NFOs that I find trying to identify the right business cycles to invest in and so on. And, the backdrop is also the fact that if you look at it from an international market standpoint, especially sectors like tech and growth stocks, we saw a very sharp correction. I mean, we all know what happened to Tesla, I mean, look at any of the big names, Apple, Microsoft, they all corrected significantly. And like they say, this recession is perhaps the most anticipated recession. You speak to every pundit globally, or you listen to any Bloomberg news these days, everyone speaks of an impending recession. So, so that's, of course, the global charter. And then you look at India, and you find that the Indian market outperformed amongst this fairly turbulent 2022, right? And this was very clearly driven because I think if you look at what our central bank did and what our government did, I think there was a lot more prudence. And I mean, overall, the market seems to have been a beneficiary. And when I looked at it by sector, clearly, you look at the PSU pack, banks in particular, I mean, they've had a fantastic run over the last 6 months in particular. And at the other end of the spectrum, you looked at IT. IT was, in fact, as a sector, it was down, I think, 24% last year, right? So I think there seems to be a view towards looking at fixed income in a way, because we are in a mature stage of the rate hike cycle. Cumulative tightening has been very rapid and substantial ever since, I think, last financial year started. So, every time the central bankers met, we saw a rate hike. Overnight rates rose 300 basis points this fiscal. So I think the forecast seems to be maybe 1 or 2 more hikes is possible. There is a clear recessionary stagflation environment risk globally. And, this is going to create challenges, obviously, for asset prices. And naturally, there will be a larger market volatility coming out of all of this. So we believe that, from our own assessment, and we have multiple internal teams review this, I think what we see is we believe that yields from a fixed income standpoint will continue to be volatile over the next few months. And our expectation is that this is going to likely to oscillate in a tight range, let's say between 7.2 to 7.6% in the near term. So that's our, across equity and debt, global, India, that's our broad view of where we believe we stand.
Actually, you touched upon an important point that interest rates are going up. Inflation is sort of peaking out somewhere now. And what we internally also feel is that 2023 will be a year where we might see a very big shift in macros from beginning to end. That's something which is quite possible, looks like. And it makes our task really difficult, I feel, as wealth managers as well as asset managers, What do you really think? We have our opinion, but I think it's always interesting to understand from you also. Where you think alpha is likely to be made this year? It could be you can comment on cap curves, or you can comment on different asset classes. Where do you think really the alpha likely to be made, which can help the investors?
So it's a tough question. No, that's why we as good, prudent bankers, we leave it to our top asset management partners to navigate these very, very difficult choices and decisions. But, given that, over the course of our work, we end up meeting a spectrum of very wise people, also industry leaders. I think infra seems to be, a theme that many of the wise folks are talking about. We are seeing sectors such as industrials as a potential gainer because there is anticipated capex. I think one thing I'm sure all of us agree is balance sheets have got cleaned up in multiple sectors. Of course, banks have had balance sheets like never before now. If you look at the public sector bank pack, you look at all the private sector banks, I think the balance sheets look pristine. So I think what we believe are the themes, and I think if I were to hazard a guess, and prediction is a very dangerous sport, so I'll not try and do this too much, but I think the very self-evident ones, let me just state that. I think the consumption theme in India is here to stay. Very clearly, India is pushing manufacturing for job creation at scale. So I think industries which are focusing around that, I would think there will be opportunities. The digital theme is very dominant. And I think already whatever results we are seeing of some of the IT majors are showing that, there is good traction there. Plus, I think the China Plus One strategy coupled with all the PLI schemes in various sectors, obviously manufacturing is getting a big thrust. So we believe that also the banking sector is also showing consolidation. Larger banks are gaining market share. The corporate NPA cycle has clearly improved. Everywhere you see digitization. I mean, the call out would be in terms of digitization of processes and payments. It's just rewriting the rules of the game in terms of how credit is given in India. So whether it is to the MSME segment or whether it is to the retail segment, underwriting processes are changing, collection capabilities are changing. And India's, if I were to look at the big picture, India's system credit to GDP is at 91%. And if you were to compare this with, let's say, the US, that's at 156%. So I think the larger game is credit growth headroom is quite available in India. And we would believe that retail credit growth will continue to gain. At least from our country's standpoint, we seem to be well and truly, we've left COVID behind. So there is a lot more consumption demand that's coming more and more. And I think interest rates are also, I think, reaching the peak point more and more. So hopefully that will start tapering off the increasing interest rate cycle. So once it kind of starts tapering off, I think it should fuel growth across some of these sectors that we spoke of, right? And I would also state that I think it also gives opportunity, especially from an alternate space, right? I think ideas like venture debt was not something that was well understood, I would say, even 5 years ago. But now we find there is a lot of interest amongst our customers, investors in areas like venture debt, venture equity. So all of this will fuel the economy even more. So that's my That's my future gaze.
Just before I go to my next question, I must tell you, Satheesh, a lot of questions are pouring in. Okay, and we are already at 5:05. So maybe a few more questions, and then we'll take some audience questions. And I would request the audience to actually put your name there, because one of the questions somebody called Anonymous has just asked, I have the same question which I wanted to ask Satheesh in terms of asset allocation. But before I go to that, what are the differentiated traits, Satheesh, that you see in the mindset of an ultra HNI investor? We've talked about the markets. Now let's talk about somebody looking at the markets, an ultra HNI investor. So what are the differentiated traits you see in the minds of an ultra HNI investor from what is conventionally known to most of us? Okay, for example, what is their view regarding private versus public markets, or equity versus credit, approach to taxation, whatever you can share with us?
Yeah, I think so clearly. I mean, the ultra HNI has become ultra HNI because of prudence. At the heart of prudence, I would say, is asset allocation. So, typically when I meet ultra HNIs, topmost in their mind is what should be their right asset allocation. Because I think to win the game of investing, you've got to get the rightful share of bets. So, for example, if you hit on let's say an idea which could be a potential 10-bagger for you, but you only invested, let's say, 0.5% of your total, corpus in that idea, it hasn't moved your overall wealth radically, as against, let's say, somebody who bet 10% of his overall wealth asset into an idea which became a 10-bagger, and it's obvious the impact that it can make. So I think ultra HNIs are now getting more and more professional. They are building professional structures to define what should be the right asset allocation given their life stage, given their firm, given their family members, and so on. So I find this very clear. The second is they also understand the importance of longevity. So the time scale, right? Once you've got the quantum clear, saying this is the corpus that I want to invest, and these are the asset classes I'm going to invest in, I think the natural question that they like, wealth specialists to help them with is how do they think from a time zone standpoint and the concurrent taxation impact, right? So you've got to get asset allocation right. You've got to get longevity from a time standpoint. And like I said, the right sizing of the investment bet, right? So that is something that I find in all the ultra HNI conversations. That's something that I find. Also, the other way of splitting the wealth wallet is this is the corpus that the customer says is long-term asset. And then there is a certain percentage which is carved out for tactical and opportunistic strategies. So I can tell you that in 2022, there was a lot of ultra HNIs who were upping their US dollar allocation. I mean, the dollar rupee, you saw how much dollar strengthened versus the Indian rupee, and for that matter, against many other emerging markets. Investing in bonds and fixed income opportunities is getting more and more attractive. We are seeing the aggressive monetary tightening, very strong growth in the US, right? US currency has appreciated substantively. And they're also realizing that a lot of private market displaced valuations are getting knocked out. And we did see that some of the companies that got listed basis their private valuations, and they segued into the public markets. What happened to public investors after that? So I think that realization is also getting clearer in terms of making assessments on the right metrics around cash flows, around sustainability of those cash flows. The other thing which continues as a trend is the ultra HNI looks at the globe as a seamless place to invest. So they're not constrained like before. I think there is greater acceptance around fully leveraging their LRS limits, combining it with their family members, and they start building a corpus outside India. We did see a bit of a dip in terms of outward remittances. We tracked that very closely. Under LRS, for example, I was looking at the October data. It was kind of a bit muted, but I think those are short-term aberrations. And overall, I would say that the newly minted Ultra HNI are showing much greater aggression in terms of also looking at venture ideas, private equity ideas, investing in startups, right? Looking at offshore opportunities. So, they are dabbling in many of these ideas. And I would say a simple way of capturing this opportunity is the opportunity in the AIF space, right? Alternate investment funds has very clearly captured the interest of HNI, Ultra HNI investors who are seeking diversification, right? So they are people who want to take concentrated bets on some themes, on some specific asset classes. They are choosing AIFs. And it is therefore not a surprise that the AIF industry has actually grown 7 times in the last 5 years. I think the number is whatever in the 7 lakh crore ballpark now. So I think the novelty value is coming through the AIF route. And I would say it positions us very well, both from a wealth manager standpoint and from an asset manager standpoint, to choose themes that can really make much more expansive wealth for our clients. And our Ultra HNIs have these themes in their mind to see who is the best asset manager who can really help them ride this wave.
Very interesting. Satish, even as you were speaking, there were so many questions popping up in terms of AIFs, Gift City from the audience. So what I'm going to do is I'm going to ask you one more question in the interest of time, and then probably straight away go to the audience questions. See, one of the more conventional investment avenues has been real estate for Ultra HNIs. But of late, I'm seeing that there is an alternate view to look at it, an alternative view to look at it. I think a lot more people are now looking at real estate debt. They're looking at real estate through a variety of different vehicles. What is that you are seeing out there? How do HNIs investing in real estate, how do they tackle these multiple investment products? How do they get into it? If you can just give us some insight before I move on to the audience questions.
Yeah, I think it's a great question. I think real estate has always been very dear for Indians over decades. I think what's changing now, I mean, if you have to look at what is the corpus of investment in equities, currently, let's say that number is from an HNI pie chart standpoint, something like 34%. And then when we look at commercial real estate, either directly or through funds and REITs, now it's summing up to almost 25%. And we keep doing these, assessments even from industry data points. I think this was a Knight Frank study. And a significant proportion of 25% was actually allotted to commercial properties, either directly through ownership or indirectly through funds. So that's what we saw from those studies. What we are seeing is that there is a clear change in terms of investing in commercial real estate through REITs, right? And like I said, 25% of the portfolio of Indian HNIs, Ultra HNIs, are finding way into this real estate investment trusts. And again, around 37% of total wealth allocation is towards primary and secondary homes, out of which 15% allocation is also interestingly towards residential property outside India. So they are not restricting themselves just to holding Indian real estate, either directly or through a REIT format. And they're also remitting money under LRS to look at these kind of investing opportunities through the REIT route, even globally. And the other thing we are finding in this subject is the much needed liquidity through REITs, they've been able to actually earn, and we're looking at it across the spectrum of these REIT products. The CAGR that we saw was almost 12%. If you look at both capital gains and dividend, if they held since listing of these REITs. And 2022 was clearly one of the best years for real estate. Obviously, the headwind that the real estate theme finds itself is the interest rates going up. So that needs to be watched carefully. But again, at a fundamental level, I find that a lot of capital is actually chasing grade A commercial real estate, including warehouse opportunity, data centers, retail malls. And I think this is a very interesting asset class again for ultra HNIs to allocate capital, right? And we did, like I said, saw a 12% kind of a IRR opportunity in the past. So that's the way I would see this space.
I say this half in jest, half seriously, is that one of the things about real estate today is that we need some information, some advice on what property to buy. Okay, I think if there is something like that which Burgundy Private provides, we're more than happy to subscribe to it.
Yeah.
But okay, I'm just straight away jumping into the questions. By the way, there's some cool merchandise available for the best question. So Satish will select at the end of it. Sarthak Patel asks a question about what's your view about alternative asset classes like P2P lending, startup equity, lease financing, etc.
So I would say, you look at peer-to-peer. The first thing is this is a evolving regulatory space, right? And we've seen mishaps in some markets, China. We've seen what's happened there. And I would say that this is emerging. It is something that from a theoretical standpoint makes sense because, these peer-to-peer platforms in a way are disintermediating banks. And on paper, it looks very attractive that look, with Bureau, with so much data available, you can underwrite leveraging data, AI, and so on. But I would still, my view is to tread this space with caution. You can experiment, but be very aware of the risks involved, right? And I can tell you that peer-to-peer lenders in particular, when COVID hit them, many of them had great difficulty in surviving, right? Unlike banks, which have large balance sheets and so on. So you've got to be very aware that whenever there is a black swan event, return of capital itself gets under question. So you've got to therefore take measured risks, right? I'm not saying that do not play some of these opportunities. Like I said, it depends on who is the service provider, how robust are his risk assessment platforms, what is the margin of safety. These are questions that need to be assessed, and these are specific to that specific opportunity, which is why it's always prudent to have good wealth managers hand-holding some of these investment decisions. So I would say cautiously play the space, right? It does sound very interesting and it is evolving.
We talked about cautious, tread with care. Here is the question straight out of the playbook for you. For NRIs, Kapil is asking, for NRIs, is it wise to consider small allocation to crypto as part of asset allocation? This is as alternate as it gets.
Yeah, so I have a, what shall I say, a view on crypto. I think we've heard our the Reserve Bank of India governor speak on this subject many times. And I think there is a lot of wisdom in his words. The underlying value of crypto, and my other favorite hero is Charlie Munger. His views on crypto are that it has no intrinsic value in a way. It's a very speculative asset class, right? I did see recently the overall crypto store of value of this asset class crossed $1 trillion again, right? So what it tells you is that in a world where you had Bernie Madoff For those of you who haven't watched Bernie Madoff's Netflix latest, you must watch it. It's I think a 4-episode series on how some of the richest and the most intelligent people invested money in Bernie Madoff and burnt, years of their savings. So I think crypto as an asset class, I would say, has proven itself to be very untrustworthy, right? Very unreliable, right? And you heard, in a way, it is a risk to governance of money, right? So there will always be a perennial push by central banks globally to try and regulate that. And in the quest for regulation, the key question will be asked around the store of value and such. So I would say that, I mean, if you have hard-earned money, don't part that in cryptos.
Got it. I think that's as clear as it gets. Sri is talking about some sort of framework, where you can have asset classes, percentage allocation that HNIs are investing for ready reference. Sri, there is a book which has been released by Axis Bank. I think that's the Hurun report. Satish, am I right?
That's right. Yeah.
It talks about ultra HNIs across the globe. That is available, and we can send that across to you. Also, I made a presentation in a recent PMS Bazaar conference in which I talked about AIFs and some asset allocation, where you could have a look at that. My team is available. They can just guide you on that. Lots of questions on markets, in terms of views on markets, primary markets. Bhubaneswar Synergy Center, Atomic Education is asking, if I want to invest 1 crore, what will be the return after 3 years? Which PMS I should choose? I think these are specific questions which we'll be happy to take offline. Abhishek Agarwal is asking, are we saying that while we are still part of the global framework, but because of huge DI retail participation in the markets, which we have clearly seen last year, Indian markets are relatively immune and thus safer to invest into? Abhishek, I think this question was just answered a little while back by Satish. Mayank Pandey, if you can just quickly highlight, Satish, last question, please add some point with gift city opportunities, adding and global clients investing in India through the same.
Yeah, I think Gift City is a great place. We are, look at it from an India, India has fueled many economies. I think if you look at Dubai, you have DIFC as a setup there. I think the very thinking behind GIFT was, why can't a lot of the Indian wealth that goes offshore, why can't it be housed in our shores and be given the same opportunities that they would otherwise have, both from a choice of investment vehicles and from a taxation standpoint? And I would say that both are emerging. Right now, it's still very young, but every top asset manager, every top bank has already got their foundations going in Gujarat. So we believe that over a period of time, it will clearly start giving options to investors, especially NRIs, and also some of the high-end, top-end, Indian money to begin with, and perhaps over a period of time, even foreign money that would like to invest in India. It will come through the Gift City route. So I think we should look at Gift City from a wealth manager standpoint. We are setting up shop there to look at, to begin with, facilitating dollar deposits and so on. But I think over a period of time, it will also help in investing in PMS ideas and so on across a full spectrum, right? So both from a discretionary and a non-discretionary side. So I would say this again is a fantastic opportunity in the quarters ahead.
Wonderful. Padmana is asking some questions about, does Sundaram Alternates offer options for global investments? A lot of questions for Sundaram Alternates. We can take them offline. Yes, we do offer a lot of investment options. And needless to say, Axis Bank also recommends some of them for us. You can check out with your local advisor there as well. But before I announce the winner of the prize, Satish, I think I will ask you to do that. In the spirit of this being the alternate universe, I just wanted to put an alternate twist and probably ask you a question. Which I don't know whether somebody's asked you before, but to my mind, I think it's a question I would love to get an answer to. You love sports, and if you were a sports person and not in your current role, with not so much of access to information, how would you have gone about planning your wealth?
So, yeah, I think it's a twisted question because firstly, if I chose sports, I would hope that it was a sport like cricket, because if you were great at some other sport, it doesn't really, first you have to create the wealth for that wealth to be managed. And clearly the wealth that's been created by our top cricketers are eye-popping numbers, and more power to them. I think they thrill and create so much pride for all of us. So, I love that opportunity for them. So as far as your question is concerned, I would clearly, delegate this responsibility to a very prudent, trusted brand and a very trusted wealth manager to handhold this for me. Because it's very important. I've always been a believer in respecting and rewarding experts, right? And one trying to imagine that one can be great at everything in today's day and age of ultra specialization is a foolhardy pursuit. So I would definitely rely on the expert to navigate the choppy markets, which are much more unpredictable than sports. And I think, and then I would sit down with that person and look at things like, given that sporting careers are not for too long, I mean, most sports person, I mean, take cricketers, typically a 2 decade, if you're at the top of your physical capability. So what do you do for the next, let's say, 40, 50 years after you retire? So I would think about that much in advance. And you will start, therefore, creating, corpuses for, one's passion post that as well. So to fuel a business idea, how do I create a corpus for that? I would start planning towards that. Also very important to think about things like insurance, right? Health insurance, life insurance. We've seen so many accidents happen. We've seen, some of the topmost superstars, cricketing superstars, have sudden demises and so on. So you've got to be careful. You have to think for one's family. And therefore, insurance is something that one should think through in depth.
Interesting. So stick to your core and leave managing money to the specialists. Well said. Satish, if it's okay with you, would you want to give Sarthak Patel, who's asked you the question on P2P lending, startup equity, leasing, etc., the best question prize? Would that be okay with you?
Yeah, definitely. Sarthak is the right person who wins that award.
Sparked off a discussion, right? He just sparked off a completely different discussion. I quite like that.
Yeah, definitely. Yeah.
Great.
Congratulations, Sarthak, for that question. Thank you.
My team will be in touch with you. Thank you so much, Satish. Thank you for your time. It's almost time here. And I personally enjoyed the discussion. I had at least 10 more questions I wanted to ask you, but I think that can wait for another episode. Thank you so much, Satish, on behalf of Sundaram Alternates, my colleague Madanagopal, and team PMS Bazaar. Thank you so much for being on the show.
My absolute pleasure. I really enjoyed talking to you, and really very lovely audience who heard us out. Thank you very much. Thanks, Madan. Thanks, Vikaas, for all the effort taken, and to your team as well. Thank you very much. And thanks to the PMS team as well. Thank you.